Hey fellow stock guardians, happy Wednesday, June 23rd, 2021. I'm Hoda, a stock card CEO, reporting to you from a mixed stock market. Today, I took a look at the market indices and how the housing prices may have affected investor sentiment. I also checked in with and researched two recent SPAC IPOs, Clover Health and SoFi Technologies. We ended the day with a mixed market. Both the S&P and the Dow indices finished in the red, while the Nasdaq barely finished above the green. With uncertain and confusing Fed comments in the past week, investors look for more economic indicators to clarify the market's future. New data from the Commerce Department came out today. It tells us home buying has slowed, while the median price is as high as ever, another victim of supply chain issues and inflation. This serves as a reminder to financial markets that inflation is ever present, possibly causing investor hesitations today. Before discussing winner and loser stocks of the day, a big shout out to all of you stock guardians. Thank you for watching, reading, and listening to daily market recap reports. Our mission is to make investment research painless for you. Make sure to subscribe to our YouTube channel, subscribe to our podcast show, or create a free account on stockcard.io if you'd like to receive these market recap reports every day. Today's winner stock of the day is another suggestion by StockCard's VIP members. SoFi Technologies, ticker SOFI, is a SPAC IPO that finished Wednesday up by more than 2%. In the past, SoFi was known only for school loan services. With their new CEO, Anthony Noto, in charge, the business pivoted to create a challenger bank offering a one-stop-shop tech platform for all your financial needs, from investing to loans to financial education and more. The company has reported 7 quarters of faster year-over-year growth in membership base. What distinguishes SoFi from other banks is its ability to acquire users at a much lower cost. Users may join SoFi to trade crypto and then graduate to get a loan or open an account. We've seen a similar low-cost customer acquisition from companies such as Square. With almost no physical presence, this new generation bank has much lower operating costs too. You can see the evidence of it in its rapidly improving adjusted EBITDA, adjusted earnings before interest, tax, depreciation, and amortization. Despite all positive signs, let's not forget that SoFi's plan for future growth relies on generating more revenue from their existing customers down the road. While they want to bring more people into the service, they ideally want to benefit from being a one-stop shop for their paying customers. Upselling more products to the existing base may not be as easy as everybody assumes and end up taking too long or too much. One thing that makes me worried about SoFi is that it is diversifying to new financial products too fast. Each of the company's product offering can be an independent company by itself with regulatory challenges and operational complexities. It also makes it hard to understand SoFi's operations well enough to jump in now. I could be regretting it later, but this stock is still a watchlist candidate for me. The second SPAC IPO suggested by VIP users is Clover Health, ticker CLOV. Yesterday, the company saw a 20% jump in its share price, followed by another 9.5% today by closing time. Today, though, we are stepping back to look at the bigger picture. Relatively speaking, this jump is only a fraction of the ground needing to be recovered from Clover's downtrend. June 8th was the height of the short squeeze craze, with Reddit traders sending the value up to $22 before a massive sell-off led to a drop to $13.80 or so today. The gain we saw today come from the discussion surrounding an SEC filing by the company, acknowledging the possibility of short squeeze. Aside from short squeeze drama, Clover's product is interesting. It uses data and machine learning to assist physicians to make better decisions when they are diagnosing. The company works with 2,000 physicians so far. It also uses the same data and AI technology to provide a more accurate and less costly Medicare Advantage health insurance plan in 34 counties and about 60,000 members. Of course, the market opportunity in the US Medicare insurance is quite large, and Clover's plan is currently addressing the needs of only 3 million patients. This means there is a large market opportunity for Clover. It also means Clover still has a lot of work to do to grow and expand its share in the market. With 2,000 doctors and 60,000 Medicare Advantage members, it almost feels it was too early for Clover to go public, and it still needed more time to establish its business. But I guess that's what SPAC mergers are for. You go public and get access to capital much sooner than a traditional IPO. For me, it just feels too early to assume Clover can take over shares from the likes of United Health, UNH, and other ones. If it does, it would be an excellent investment for a long time. I would rather wait a bit and let Clover grow a bit more before jumping in. That's it for today. If you haven't already done so, please give StockCard a try, research as many stocks and ETFs as you want, and consider following a few successful investors by visiting the stock pick page on a StockCard platform. Don't forget to sign up for a 14-day free trial with promo code ROLL with our CEO, all lowercase and in one word, to get an additional 10% discount. And don't forget to like, subscribe, and share these market recap reports with your friends, and come back tomorrow for another episode of Market Recap Report. See you then.